welcome to UTI Mutual Fund presents Swatantra, an investor education initiative which is powered by ET Now. I am with my team right here in Patna trying to bring about more awareness about mutual fund investment as also financial planning. We have with us in Patna an esteemed panel that will be throwing more perspective on how mutual fund investments as well as better financial planning can help investors at large. I have with me Mr. Kumar, who's an independent financial advisor. Mr. Gaurav Mehrotra, who's also an independent financial advisor. And Mr. Binoy Shankar Sahai, who will also be talking about the benefits of investing in mutual funds, and a live audience which will be asking questions and having their queries answered from this esteemed panel. Let me start off with you, Ravindra. Let's understand why, as a financial advisor, you would perhaps advise investors to invest in the equity markets or make mutual fund investment a part of their financial planning program.
Generally, the investment option available with various of investors is fixed deposit. They know just fixed deposit, put their money into fixed deposit. But in long term, say fixed deposit, inflation is beating the returns of fixed deposit. Mutual fund, one should participate in mutual fund through in equity market through mutual funds just because mutual fund is an instrument through which the returns generally beat inflation, and post-tax return is something more than what we get in inflation, what we get in inflation. So one never has to take an advice of expert. Fund manager is there to take care of investment. These are the features of mutual funds in which mutual funds give good return because fund manager is there to manage the fund, to look after the stock market and to find the particular good stocks, value stocks for investment.
Mrs. Sahai, how do you rationalize investing in mutual funds, especially via the SIP route, which is systematic investment planning?
SIP route is the best that will averaging the cost of the rupee, and you have to set the goal of the individual person at what time he requires the money for education of the children, for marriage of daughter, or if he is a young person, he has to buy the car, and after some time he requires the house. So if he will go through the SIP, he will get the benefit of all these things.
Gaurav, you want to add to that, mutual fund investments, why they are beneficial for people looking at investing in the equity market?
Mutual funds are, according to me, the best route for financial planning, for the short term as well as the long term. Basically because of better wealth creation opportunities that mutual funds provide, better tax efficiency because most of these other asset classes are taxable at some point of time, and they basically help one achieve all the short term and long term goals without too many complications, they are very flexible. That's another very, very good feature among mutual funds. One can exit these instruments without attracting too many taxes, without attracting too many exit charges vis-a-vis the other asset classes. That's why I think mutual funds should be the preferred medium for financial planning for all age brackets of investors.
Right. The purpose of this investor education initiative is also to get all of you to interact with our guests out here, have your queries clarified. So if you could have some questions from the audience, then this would perhaps be a more engaging discussion because our guests over here can identify specific problems or queries that investors may have with regards to investing via mutual funds. What kind of mutual funds, at what time, how much to invest in mutual funds, how should it be incorporated as part of a financial planning program. So if you could have some questions, that'll be great.
I would like to ask about, all of you know the Nifty is the benchmark for the stock market, But if you see the composition of the Nifty, the more the sectoral weight is skewed towards the banking and financial. So, and the construction sector and the real estate sector, no real estate is there in the Nifty. Number two, the Nifty is representing the broader market. And suppose what we are finding that there are many, this broader market has not performed well. But Nifty has performed well as compared to the broader market. So is there any benchmark or the index for the broader market? How can we know that broader market, Indian broader market has performed? So is there any benchmark for that?
Okay, I think I'll tie in that question with a quick assessment on how, one should be looking at mutual funds, index funds essentially,
Index.
He's saying that the composition of the Nifty is skewed. I mean, if there's so much banking and financial services in the index, then might as well look at buying a banking and financial services mutual fund, a sectoral fund, rather than exposing yourself to an index fund, because there's so much dominance of financials on the index. So what do you have to say to that?
See, these sectorial funds are basically very risky. If your investment horizon is for long term, generally go for diversified equity funds. So sectorial fund is of short term, you have to monitor the fund, and while you are going in diversified equity funds, a fund manager is there to putting money in all sectors.
But what about a comparison between bank fund, mutual fund versus the index fund?
The investment in banking funds is all into the banking sector. All fund managers generally pick the banking stocks. While in index funds there is mixture of, as you rightly said, there is mixture of certain banking sectors and all. Real estate is not there because real estate is really very risky. Currently fund manager is not going to take so much risk into real estate. That's why. So my advice to all of you investors who is looking for long-term plan, go for diversified equity funds.
Gaurav?
My take on the gentleman's query is, you see, it's inappropriate for us to comment on the composition of the Nifty index as such. But the mutual funds, by and large, over a period of time, are able to beat the index by a huge margin. And so it is more appropriate to take exposure to diversified funds vis-a-vis an index fund and also a banking fund.
Okay.
Or any other sector fund.
What about a mid-cap fund in this market?
Well, mid-cap funds are a very good class of investments for the long term, and they come with appropriate risk as well as the returns. Over a long period of time, many of the mid-cap funds which have been around for 15-20 years, they have delivered amazing wealth creation for investors. But they come with risks in the short term compared to their larger cap or multi-cap counterparts. And at times when the markets are taking a heavy beating due to fluctuations in the Indian economy or fluctuations outside, events outside the India, then mid-cap funds and small-cap funds are known to fluctuate and show very high beta, lot more than your index funds and diversified equity funds. So one can invest in mid-cap funds with a reasonable allocation. There has to be a balance between in the allocations between large cap funds, mid cap funds, and small amount can be allocated to small cap funds also. If the investor has a risk appetite, the risk appetite for their investors has to be well known in advance. Then these allocations
So
can
for
be
the gentleman who asked you this question, what kind of allocation would you advise between large cap, index, mid cap funds and diversified funds?
Well, the allocations would also depend on his time horizon that the investor has.
Time horizon and
Time horizon
age
is
of
a very key parameter to be kept in mind while allocating investments in mutual funds.
And it is also depending on the age of the investor. If he is above 60, he can't invest it for 10 years or 15 years. So he should better prefer to debt fund and liquid fund. And if he is younger generation, he can go for longer term for equity.
Actually, everything is dependent on his goal. What is his goal? If his goal is short term, let's say about 1 to 3 years, debt fund is preferred. If his goal is in between 3 to 5 years, he should prefer balance fund. If his goal is more than 5 years, let's say 7 years, he should definitely go for diversified equity funds. Any diversified equity fund can generate a return more than inflation, about more than 15% return can be expected from any diversified equity fund. And for general investment whose goal is 10 years, 15 years, SIP is the best mode. On an average, SIP has created a return of more than 20%, CAGR, compounded annual return. So my advice is to first determine your goal, a risk appetite, then allocate the fund according to your risk and goal.
Any other questions?
As a common man, I just want to invest some sort of money in mutual fund. Which is the right time to invest that?
Always there is right time to invest if your goal is determined, if your goal is fixed. Let's say, as you talk about child education, just assume that your child's age is, let's say, 14 years. And at the age of 18, 19 or 20, you will be needing lump sum money. So, since goal is 4 to 5 years, you can put your money into balance fund. When let's assume that at the age of 19 years, if his age is at 19 years, you see that next year at the age of 20 you need money. Whatever return is being generated in 4 years into balance fund, put the investment into debt fund or somewhere else, safe side, so that next year you will be achieving the goal. Because if market falls the next year, you may be loser. So goal is important. Again, I am saying goal is very important for making an investment. The mutual fund is wonderful instrument. There are a lot of funds. In debt funds also you can make money where return can be expected from 8% to 12 and 13%. You can also take the benefit of indexation, double indexation where you have to pay less tax.
Yeah, you have a question.
As going for an investment in mutual fund, we often come across this situation, market volatility. As being an investor, how to go about this situation? Can you please go for it?
See, if you're going if you're taking the benefit of fluctuation, SIP and STP is the best mode. I'm just describing one and one. SIP is a mode of investment where every month certain amount, suppose you are making as a student, if you are making investment of 1,000 rupees per month, this amount is being debited from your account every month on a particular date. And the benefit of volatility is being taken by you. You are double benefited in the SIP. As market is falling, the number of units is being accumulated. As market is rising, the value of units is more. So SIP is getting good return. The second mode of investment is STP, where if you have got lump sum, let's say 1 lakh rupees, and you are afraid of the market may fall in the coming 1 year or 2 years, put the money into liquid funds, take the mode of STP. You can opt for daily STP also, you can opt for weekly STP also. All modes are there. And slowly this fund will, from liquid fund will go to equity, and you will be benefited in both sides. In the liquid fund, suppose 1 lakh is there, about 7 to 8% return is there. A time will come when 1 lakh will go to about 1,05,000 and all the money will be moved to equity funds. So benefit of averaging is there. STP is bit safer than SIP, and return is also something bit more than SIP.
Oh, okay.
I'm 20 years old and I'm an early investor. So any loopholes what we should be aware of, any market risks, what we should be aware of?
Better you will go for the SIP route for longer term, and you will create the wealth. And of the total amount spared by him, it should divide in 2 or 3 funds. One large cap, one diversified, and one mid cap.
So you need to invest in 3 kinds of mutual funds: one large cap, one mid cap, and one diversified.
And if he has got more risk, some amount should be invested in sectoral funds.
Okay.
जब मार्केट एक दिन और आ जाती है तो मुझे अपना म्यूचुअल फंड रखना चाहिए या बेचना चाहिए या फिर और इन्वेस्ट करना चाहिए उसके लिए?
That's a very good question.
When market is falling, then we should invest or we should quit. You should definitely invest. You should quit only when you need the money, when your goal is important. You should invest when market is falling, definitely. But that should be into diversified equity fund. It should not be into sectorial fund.
In the stock market, in present times, market is very volatile. You want to diversify your risk in mutual funds as well as SIP, some systematic investment plan. So I need after 20 to 25 years, 2 crore rupees. And in present times, I want to invest only 2,000 rupees on monthly basis. So which one will be better scheme for us?
My dear friend, you could select good diversified funds which have a very good track record. You should, if you have a good financial advisor, consult them and understand from them which are the funds which have got a very good consistent record of performance in the last 15-20 years. That is one of the very important things you look at while selecting a fund to choose from. There are many funds to choose from in the mutual fund industry. So if your starting corpus is 2,000 per month, then even that can be spread out into two funds, maybe 1,000 rupees into two, and you could select a good fund and then be strict to it. Many investors that we see today, they are unable to stick to their choice. They keep on trying to shuffle their investments every few months or few years. So that will lead to a lot of erosion of wealth, and you will not be able to achieve your long-term goal, which you say is pretty high just now. So the key is to select good funds, whatever be your corpus of investment, identifying the funds and stick to them in the long run, and not try to juggle them in between.
Oh, okay.
I have two questions right now in my mind. First of all, why should I invest in mutual fund rather than other bank saving policies, and what makes it different from other policies? Also, is my investment safe with a good return by keeping the ups and downs of the market in the present scenario?
There is so much of volatility in the market, but if you want extra returns compared to your banks, you have to live with volatility. If you cannot, if you are a risk-averse investor, then bank FDs or debt funds are a better choice for you. Mutual funds are not necessarily risk. There are many less risky funds in the mutual fund stable, because inflation in any economy is a given, and to beat inflation in any economy, whether it's the Western economies like the US or Europe, where the inflation rates are very low, investors have to live with volatility and get those extra returns. But if they do not like so much of fluctuations in their portfolios, then they have to live with less risk, less returns, and go for debt funds.
Any other questions?
I want to ask that which would be better, a financial advisor or a investor?
As a profession, should he invest and become an investor, a professional investor, or should he become a professional advisor?
Both. Be a financial investor, be a financial advisor, and make your own investment also. Both is needed in your practical life.
You can only advise better if you invest yourself. So I guess that's where the answer lies.
क्या कमी रह गई कि अभी तक पटना जैसे शहर में या बड़े बड़े शहरों में म्यूचुअल फंड की तरफ लोग आकर्षित नहीं हो रहे हैं, जबकि रिटर्न इतना अच्छा होता है। यहाँ जो भी क्वेश्चन आ रहा है अनसेफ करके लोग जानना चाह रहे हैं, तो उसके लिए एएमसी की तरफ से एडवाइजर तो काम कर ही रहे हैं, एएमसी की तरफ से कौन सा कदम उठाया जा रहा है? क्या उसका प्रचार प्रसार नहीं हुआ? क्या समझाने में लोग विफल रहे? इसकी जानकारी जरा दी है।
Ravindra?
In fact, initiation has been started already. Investor awareness program has been started. This is also the result of that. So very soon you will be getting the result. Yes, there is lack of good advisors into the market, but the time is changing. Young generation is coming, and this is good.
Any other questions?
I'm 15 years old, and at this age I can't earn, but I get pocket money. And is there any scheme for you that I can invest my pocket money? And what are its benefits?
Well, I'd like to commend you on your interest in saving so early, because most young children are not even bothered about these things. They're interested in enjoying their pocket money much more than savings. So I congratulate you on your amazing thoughts. Now to your query, first of all, what you need to do is help your, request your parents to open a bank account for you as a minor. in any of the bank accounts that are banks that are around your place. And once the bank accounts are opened, then you could put your pocket money into those savings account first, and then get a proper financial advisor to help you, advise you on which funds. There are funds which allow you to save as low as 500 rupees a month, and some of them a year allow you to save as low as 100 rupees a month also.
Now I have got two questions. The first one is about post 52 years of aged people like me. So I want to have a pension of say 10,000 around per month after say 8 years or so. How much approximate amount I should invest in pension fund monthly so that I can have a pension of rupees 10,000 around after 8 years of after 8 years.
You're 50 right now, you're saying.
52 say. Okay.
So you're going to retire by 60.
Yeah. Second, further, is it worth really to invest in pension fund at this age or to go for other funds?
You see, there are many kinds of pension funds that are available in the market. There are two broad pension funds. One is the insurance system of pension funds. So our advice is you should stay away from the insurance system of pension funds, which are very costly to you, because the charges that are charged to you in the insurance system of pension funds or any other kind of funds are very, very costly. That will automatically lower your returns. Then you come to the mutual fund system, wherein there are a few pension funds that are available, and there are diversified funds also available. So if you, sir, have a proper, an appropriate risk appetite, if you can digest the small, short-term volatility in the markets which happen from time to time, and you have an 8-year time horizon, then some good a combination of good balanced funds and equity funds through SIPs can be used to build a good pension fund corpus right now. That should be that can be a good approach. Thereafter, once you achieve your retirement age of 60 or 65 or 62, then a system called the systematic withdrawal plan is used for encashing the corpus as a pension. And you can get a very decent amount as pensions.
Okay, Ravinder, you want to answer?
Yes, I'm just giving you an example of systematic withdrawal plan. How it is, what the magic of systematic withdrawal plan. Someone has invested, I have got a statement, someone has invested 25 lakhs rupees 15 years ago, and he used to take 25,000 rupees per month. After withdrawing about say 46 lakhs in 15 years, his corpus was about 1 crore 1 lakhs. So this is the magic of systematic withdrawal, where corpus is, day by day corpus is also increasing, and you are getting a fixed return also. But you need is patience for 8 years. You have to be into the fund. You have to remain steady into the fund.
Okay, we are running out of time, so Ravindra, I'll let you have the last word. Just summarize the discussion today, and again reiterate for the benefit of our audience members why investing in mutual funds is important.
Say, investment is something when income minus expenses is equal to investment. This is the concept. But think of a situation where income minus investment is equal to expense. You will create lot of wealth. And mutual fund is an instrument where each and every goal can be fulfilled. Just have faith, have patience, have long-term view, believe in growing economy, growing India, you will make wealth.
And get a good advisor.
Yeah. And advisor is must.
Okay, great. We thank our audience members. Thank you very much. You've been a great audience, very engaging. I just want to wrap up by giving you more details about this initiative, this investor education initiative, which UTI Mutual Fund is calling Swatantra, which is powered by ET Now. If you want more details, you can go to the website called bswatantra.com, www.bswatantra.com, and the Twitter handle is #Swatantra. So on Twitter, if you people tweet quite often and have active accounts, then you can follow details on Twitter as well. #Swatantra is your way. Thank you very much.
Brought to you by UTI Mutual Fund. हक एक बेहतर जिंदगी का.
Mutual fund investments are subject to market risks. Read all the scheme-related documents carefully.